Good morning, everyone. Love it, love it, love it. Often we've forgotten our insurance friends. It's good to see our insurance friends also here. When they're talking about financial sector, they are often left behind. So glad to have you, CEO of Britam, with us this morning. This conversation, now Mr. Huntington Namara from Equity Bank in his keynote address, and in his last question, asked a very interesting question, for lack of a better word, where he mentioned that between profitability for fintechs and us having inclusivity, how do you balance that out? Men lie, women lie. That's according to the great hip hop group Wu-Tang Clan. But the numbers never lie. 92% is the number that we're given there, but then how do we transact more? Now, this panel here, I think I'm with the right group of people who are going to help us, understand how to move beyond us just having conversations. So I'd like to start with a person to my immediate left, the managing director of BPR Bank, Ms. Patience Mutesi. When we hear integrated financial systems, what does that mean?
Thank you very much, Arnold, and good morning, everyone. My response is going to be very quick. When I think about integrated financial systems, it's about making life easy for customers or when it comes to financial services. So embedding a seamless financial services experience for customers. So think payments, think savings, investments, insurance, e-commerce, all that, making sure that all financial services are embedded within our day-to-day life.
Thank you, Patience. I want to bring Mr. Bosco Sebavi into this conversation, and this is regarding also the role of POPs, right, and integrated financial systems. Africa is trading or wants to trade with itself a lot more. POPs is in a way at the intersection of that, but these cross-border payments are really, really expensive. Personal experience when you're passing Gatuna, border crossing, when you see the women traders across there, more or less, they have two SIM cards. One SIM card from the Ugandan side, one SIM card from the Rwandan side, and they need to buy good stuff from the other side, bring them this side, and vice versa. It's expensive. How does integrated financial systems, how does POPs solve for that?
Thank you, Arnold. And let me thank the Rwanda Bankers Association for inviting us to discuss this and my answer is going to be a bit longer than Patience's, because it's a history we live in today. There are four challenges of cross-border payments around the world. But for Africa, we add a few problems. Number one is cost, as you say. It's too expensive to send a transaction from one country to the other. Access, who is accessing it? Usually, many times, the bankers here will ask us for so many identifications to be able to make a payment. Number three is transparency. It's usually not transparent. It's you can't trace your transaction. So all those kind of things. But let me stop at that, only that, those three. And for Africa, we add in even the converting currencies between each other. So it becomes more complicated for Africa. So earlier on, I talked about payments infrastructure being a public good. At the inception of the SFTA, the African Continental Free Trade Agreement, which was signed here, and setting up the Secretariat, the heads of state tasked Afreximbank to run with the infrastructure, to set it up, to make payments. So at that outset, PABs were set to be a low-cost payment system, because Afreximbank didn't set it to be able to make money from it, but to facilitate into African trade. So that principle, that's what PABs is doing today. And today we charge very low. I think BPR, Bank of Kigali users, they know that we're charging $2 of some sort, where some other systems can charge up to $100. That's number one. Number two is access. We have banks and central banks accessing, but also fintechs can come in. the likes of Airtel Money, MTN, can come and connect directly to reduce, to make sure that they have direct access and reduce cost. And number three is that the system is instant. So that means funds are received instantly and one will know whether payment has failed or not. So that is transparency. So we solve all those issues around that, around payments across Africa. And the last one is that we actually pay in local currencies because we believe that Africa can benefit from using their own local currencies. You touched on the border points. Those formal traders around border points, very busy border points, Rubavu, Goma, Gatuna, Katuna. There is another one near Nigeria and Cameroon, and Cotonou as well. When you go to those border points, actually currencies are convertible because there's very heavy economic activity. So we intend that to increase intra-African trade so that currencies can align. And then we can discuss CBDCs and stablecoins that Gabriel talked about. So that's what PAPS is doing to make sure that intra-African trade grows and also to smoothen the payments across borders in Africa. Thank you.
Mr. Bosco, allow me to play the devil's advocate here. And interesting that, and I want to go back to the address that we just had, right? If we were to treat infrastructure, payments as a core infrastructure, and here we're going to talk about the role of PAPS. Please educate me like a 5-year-old. When we look at the role of PAPS, you have a bank like BPR that is in the region as KCB. You have a bank in South Africa like ABSA or FNB, which is in the whole of SADC. You have one for Northern Africa, you have maybe EcoBank in the whole of Western Africa. If we interlink those switches, which is a question for you, the bosses, do we then need to go back to the role of PAPS as a core infrastructure in that, or are we doing the same thing while expecting different results? Couldn't we have a shorter route to this inclusion?
Very interesting. Now, maybe let's break down. We have 5 big regional banks, I think, in Africa, 5 or several, EcoBank, the KCB, and the rest. But you have also smaller banks that don't have access to this correspondent banking. Now, 6 years ago, when I was still here, I think, in the bank, or 7 years ago, thereabouts, the correspondent banks totally cut off African banks. Said, we can't deal with you, you are so expensive, you are so risky in terms of KYC and stuff like that. And they actually they were given very heavy fines. So, setting up an infrastructure like PAPS at the center solves that correspondent banking problem. You mentioned a couple of banks, KCB can afford it, and a few other big banks. But we can serve many other smaller banks that serve SMEs. Africa is all about SMEs. If we don't support the SMEs, there'll be no trade. So what kind of infrastructure can we put in place to make sure that payments, SME payments across borders are supported at a low cost? Not Standard Bank, not KCB, not Equity Bank, not those big banks are going to do it. It has to have some kind of development finance element with government backing. And that's where PAPS comes in. That's where Afrexim Bank comes in.
Thank you very much, sir. I want to bring to Mr. Jean-Claude Gaga into the conversation. And again, going back to history, looking at it, we've always talked about mobile money on the continent, how Africa has been a fast mover in mobile money. Fast forward 20 plus years later, it's still the same song and same story. Airtel money, maybe across Rwanda, Tanzania, is still a little bit costly for that lady who is at the Rusumo border post and trading. How do we make it more affordable? How do we make it more convenient?
Thank you, Arnold. not just an Airtel problem, but I think I would call it an industry problem. I think there will never be a point where I believe everyone will say the cost is fair or the price is fair. We will always want to have something less. I was checking on social media, talking of less, somebody joking about when someone asks you about the weight that you've lost since you started going to the gym, you say, I'm just less. Less than what? Less than the previous. So I don't want to name how much is costly, how much is not, but I think there are several factors that could help us address the price issue. Number one, if I pick the case of Rwanda, which I know best, is we have seen what interoperability actually does. When you bring ecosystems to work together, that helps to say, one, you're all participating at a shared infrastructure that allows all of you, to spend less, invest less, but take advantage of the benefits that come with that kind of partnership. So for Rwanda, we have seen, I'm glad that Yatri is in the house, who has been helping us with the FinScope studies. I think prior to 2022, we're still below 48%. I want to imagine today, probably by the time he's checking out of AFR, he's going to leave us at almost 100%. What does this mean? It's just, again, that other vision that when you get, and which is the example of Rwanda, when the policy is right and really touches all the pain points and gets now the private sector to work together, then we come together, work, and be able to address some of these cases, such as the fee question that you asked. Now, despite all this, we still have these challenges that, yes, we have interoperability of mobile payments. We have over 80% of adults in Rwanda using financially active, but mostly driven by mobile. We have Africa having about 70% of the total wallets, over 1.6 billion, I believe. But still we have these fragmentations that JB is coming in to plug in and help us work together. So it's not really just an Airtel problem. It's also an Airtel and political and non-political. So all of us need to really work together to ensure that Arnold doesn't have to frown when he's paying for his goods, whether at Katuna or Rusumo or whichever other border posts. But I also want to touch on when governments back such decisions. Rwanda is also another particular case. When you look at the case of tax and government services, I think Rwanda had it right when we had most of these taking the lead, and they've allowed us to scale. When every consumer, every citizen knows that to be able to get a service on Irembo, I need to, get a certain digital ID. I need to have a certain way to access my account. I need to get, everything is digital. I don't need to carry papers. When it comes to EBM and all these taxes, these are creating use cases that then allow us to scale. So for us, as payments providers, and I'm glad Daniel was mentioning this as an infrastructure, we tend to imagine that just because you have this integration of payments, therefore things are done. No. Payments just help you to make the first introduction into a relationship with financial services. And hence, then we can talk about the other benefits that come with insurance and savings. But payments is just one that opens the door for that. And of course, when all this mix works together, we can address the price.
Thank you, Gaga. I want to bring Ms. Andlovu into the conversation and maybe tap a little bit into the history of MasterCard being at the forefront of many of the payments. Being at the forefront also comes with a risk. You could be a Kodak in an Uber world. What are the trends? Where are payments headed? But then how do we move from just inclusivity to actionable payments?
Okay, thank you, Arnold. So first of all, it's just to thank Tony and his team for the invitation. I'm also happy to see Mr. Sibabi here. He was the first person I met when I came into Rwanda in 2006 for the first time. He was in regulation and I was driving payments at the time. So I'm very happy to see him. Now, I'll speak first in terms of who MasterCard is, and then I'll answer your question in terms of trends. We are a financially integrated system today. We are one of the largest fintech operators globally. And if you look at the history of the company, which was started about 70 odd years ago, it was all about cards. And cards was a medium to enable payments to take place and to displace cash. So for us, the motto still remains, it is possible to live in a world beyond cash. So we'll still advocate for that, and we'll push the agenda and the boundaries to get to that. But we know that we cannot do this as a single entity. We need to work collaboratively with the entire industry stakeholders, whether it's your traditional banking partners, whether it's government from a policy standpoint, which includes the central banks, whether it's the MNOs who today have a better reach to a lot of consumers, whether it's the merchants who are actually accepting payments. And we know that one of the biggest problems today, which was also mentioned, is how do we enable an ecosystem that enables payments to be made reliably, easily, in a trustworthy manner. And obviously the fintechs that are also driving business as we proceed. So as MasterCard, one of the things that we do is, as I mentioned, we started off as a card company, but we've transitioned. We've transitioned and moved our business to other forms of payments, form factors. So today, I'm partnering with Airtel here to provide seamless experience to a consumer base that perhaps was not part of our ecosystem before. So now we've got virtual cards that start infusing themselves into payments. So, for example, I know in Uganda and in a couple of markets we've launched, it is coming here in Rwanda with Airtel. Obviously, when I look at John here, he's moving money, borders across, etc. We also have a rail that supports cross-border remittances. We bought a company a few years ago called Transfast, and then we've infused those capabilities into obviously our MasterCard network to enable the movement of money globally across borders. So if we look at Africa today, Africa is a remittance inbound destination because a lot of our diaspora are sending money back home. But the typical cost of a transaction today is roughly about 8%. How can we bring that to the levels of about 3%? And I think Transfast for us, which is now labeled MasterCard Move, is doing that. And then the remittances that are coming through are not just coming through and being sent as cash, obviously, to agents, but more importantly, we are working with banks to enable that remittance to come through into a formal bank, which is a bank account. And then we are also able to send money into a mobile wallet. We are also able to then send money to a 16-digit card number, whether it's a physical or a virtual card. And obviously, we still have the option of cash as well. So that is something that we're doing. And then obviously, when I look at Patience there, that's my traditional partner. We want to be able to ensure that as she's growing an ecosystem, how am I relevant in a world to ensure that we are touching every single transaction? Now, when it comes to the trends that you spoke about, so mobile wallets, I think, are the biggest trend that we find in our world today, and that continues to grow. But how can we make it even more convenient than it is today? How can we drive a more interoperable conversation around acceptance? How can we also then agree on the economics that are right for all the segments that are in every ecosystem? We have actually addressed all of that, including providing a low value transaction cost for those marginal transactions which the SMEs and SMEs are doing today. And then obviously the one thing that I think becomes extremely important for us is how do we bring everybody together? Because as I said before, we cannot work in silos. We have to work together to drive the message. And this is where the regulator comes in and comes, obviously through collaboration, we come up with the right solutions for the country and then agree as to how we are going to push the mandate. So we are here as a partner and extremely grateful for the opportunity, but there's more work to be done. And I think we take on the challenge.
Thank you, Victor. I'm going to come back to you because in those comments, one feels like very soon you could be a competitor and not just a partner in that new financial ecosystem. Patience, I want to talk about that new financial ecosystem. Banks over the past decade have invested heavily in digital banking and digital banking systems. But do you envision a world or a country whereby we move beyond just talking about digital banking financial systems to, the words that Mr. Gaga and Lovu have used, the financial ecosystem, and how does that world operate?
Yeah. Like you rightly said, Arnold, the future is around collaboration, and I think that's what I'm hearing, be it from Gaga, from JB, as well as Victor. And we see that as banks. You think about a few years ago where banks were really you talked about a financial ecosystem, and everyone was thinking about banks. But slowly, with innovations, the ecosystem has expanded significantly. Banks are still bringing in that trust, stability, risk management, and we see ourselves as central into this financial ecosystem. But also you have the payment providers that help us to, move cash around. And then we have the MNOs that give us that last mile connectivity that we otherwise wouldn't have. When I think about the history of BPR, starting with, very many cooperative banks across the country, over 400 across the country. Today we have a branch network of 73. We need a lot of last mile connectivity, and we see the MNOs coming in to provide that last mile connectivity. But then we also have the fintechs, which come in with the innovation, with the agility and flexibility to be able to innovate much faster than we do. So when we think about the future and how we can develop an ecosystem that is fully integrated, for us, collaboration is central to it. And we cannot do it without any of those parties that I talked about, including the regulators who then bring in the standards and making sure that across the board, all the ecosystem players are providing the same level of standards to make sure that we deliver. And I really liked what Gabriel talked about, the four attributes to an infrastructure that actually works. Without all those ecosystem players, it's very difficult that you'll be able to provide payment systems that then deliver reliability, acceptance, interoperability, and predictability. I think what's missing today and what we're struggling with to be able to have that financially integrated ecosystem is really around fragmentation. The ecosystem today is not well integrated, and we say that Rwanda, we do have an interoperability framework in place through eCash, but that's not yet fully integrated. The risk that presents is that we then need to have an infrastructure that's able to handle the volume of payments from all these ecosystem players. So we think about it the same way Gabriel was talking about road infrastructure. We think about payment infrastructure as one that has to have the capacity to handle payments from all these ecosystem players. Today, we're not yet at that pace where we have an interoperable system that can then handle the volume of payments from all the players. I think we've started in a good place with the eCash, with P2P that will be operational real soon, without any bilateral, partnerships, but more an ecosystem that is then functional. And I think as we go along, those developments will then get us to an ecosystem that is fully integrated. So that will help us to get rid of the whole fragmentation issue, because today, when you think about yourself as a consumer, there's so many platforms that you need to go through to be able to carry out very many basic financial services. We need to get to a point where we can have one stop and in a very seamless manner to be able to serve our customers. I think it's truly about the customer, understanding the customer journeys and being able to serve them in a manner that is reliable, predictable, and interconnected. Thank you.
Patience, just keep your microphone on there. I want to come back to you. And it's great that you're putting the customer at the forefront of this. But first of all, congratulations on the launch of the shareholders platform yesterday. And I want to talk about your shareholders here. If I'm one of your shareholders, my question to you would be, then what is the bank's competitive advantage if that financial ecosystem has been created? What is that?
And I think that's a really good question, because the competitive advantage is not going to be so much about moving money around, because I think it's going to be about the value that we're adding to our customers. Speed is not going to be an issue anymore, because if we have a system that is interoperable, money will be moving around at the same speed. So it's really about the value addition, understanding the customer needs, and being able to use the data that is available through these platforms to innovate to meet their needs. So we believe that if we're able to move to the next level, which is really around data exchange, we'll be able to have access to data that helps us to, first of all, make sure that we have the right scoring mechanisms. If I have information on how your cash is moving around, I should be able to come to you with a credit limit without necessarily going through 2 weeks of analyzing your financials to understand how much credit you're worth. So that will help us access data that then helps us to serve our customers much better. So speed, yes, will be an issue, but it's really speed around decision making, speed around innovating for specific customer needs, and at the end of it all, the customer will win. The bank that is able, or the financial operator that is able to come up with solutions that meet the needs of the customer and innovate specifically to that customer need will then win. So I think at the end of it, the customer is the winner.
All right, Race. Gaga, I want to bring you into this conversation from a fintech perspective. Patience has explained the role of the banks, the competitive advantage that they have there. What is your competitive advantage as a fintech?
I think you missed the most important she mentioned when she said we enable the last mile. But that's not just it. I always joke with patients that I'm a foot soldier, because I recruit people from the very low end of the pyramid of financial inclusion, and before I know it, they upgrade and leave the wallet and start using the bank. Now, jokes aside, what is our role as mobile money operators? Today, I think if you look at, and since we are talking payments and the value that it brings, I think that's what I want to keep insisting on. Despite all that we are talking about, being so integrated, we have e-cash and all, we still have challenges where this data remains in silos. We have our own data as Airtel, the other MMO has their own data, each of these 10 plus banks have their own data. So all of us, this data sits in silos. What does this mean? It means there's still a gap. When Arnold is walking into a bank to be scored on his credit worthiness. So we don't know Arnold unless Arnold comes and walks in with a UPI. If Arnold walks in with a UPI and I walk in with 20 years of transactional data, the bank doesn't know me. It knows you because you just walked in with a UPI. So we need to change that and say, how do we work together to ensure that this data makes sense and it's shared and it's used more like an infrastructure, not just rails as we keep boasting. And that's where we come in as MMOs. Two, when it comes to embedding, which is what I call the invisible finance side of things, a customer that has all this transactional history remains invisible to the financial service providers most of the time. So how do we ensure that things such as credit, things such as insurance are immediately picked at the point of sale, such that I don't have to go and try sell myself to an insurance company for them to understand how much, I could be covered. But if at every transaction it is embedded that immediately all this is picked, then when I'm walking into a place where I need to get a loan or any other form of credit, then suddenly they know who I am because of all these touch points that we have. And this is where all of us are. You'll go to our agents, you'll do a cash-in. You'll go to our merchant, you'll make a payment. You go to an Irembo, you make payment for government service. All these are footprints that you're leaving. But when you walk into a bank and say, I need a 30 million loan, we don't know you. So, which is what I want to insist. And since the emphasis I saw was mostly on the SMEs, the IFC, and this is not my study, the IFC actually is saying we still have a 330 billion funding gap for SMEs. I don't know how that translates when it comes to Rwanda, but you can do the math. Why do we have that? And this is where the payments come in, to fix some of the discussions, some of the points I just alluded to. If we can have some of these in an integrated manner and not just keeping them in silos, then they could help us, fix some of these. We become more innovative, we build more products that, don't leave any of the transactional footprints you've been leaving behind. And then suddenly when you walk in, you have a financial identity that then an institution would be able to, to relate with whenever it comes to you. So for me, I feel that is where most of us who are in the retail space do bring the value into this discussion.
Thank you, Gaga. I want to bring Patience.
Arnold, can I just say something though, that if you are banking in a bank that is requesting you for UPIs before they look at your cash flow, please come to BPR, because I do not believe that we're in that era anymore. Even for SMEs, it's really about cash flows. Cash flows come before anything. And so when it comes to interoperability, the beauty about it is then you have the merchants and our systems will be able to see the flows. Today, when we're dealing with SMEs, we know that most of them are channeling most of their payments through the merchants, and so we'll ask them for that data. It's not because it's not readily available for us. We'll do the analysis based on the cash flows, and the UPIs might be a fallback position, but it's not the primary decision maker. So just to correct that on behalf of the bankers.
Patience, keep your microphone on. You've opened a can of worms and here cash flows. If my cash flows are on mobile money, Airtel money, these fintech applications across, how do I bring that to you, and is that something you consider?
Yeah, we definitely consider that, because you can get a statement of your inflows on a merchant till, right? What would be required, and also for the benefit of the SMEs, we try to educate them, because the more you can keep your money in the bank, your value in the bank, the cheaper it would be for you. So you just need to make sure that you have a mechanism that eases money, from the MNO into the bank. And that serves then as a basis on which we make our decision, because the collections on the merchants, that is evidence from the statements from the MNO, then gives us an indication of how much you're selling daily. Because credit is really about the movement, how you're moving your stock, and that is, from the data we are receiving. So once we have the integration, I think that decision making then becomes easier, because we are able to see the flows from, your merchant till.
Thank you very much. Patience, Gaga, the number you gave for Rwanda, the capital gap is $1.2 billion. JB, back into this conversation. Lovu talked about potentially moving from 8% to a 4% in terms of cost for transactions across the continent. One, is that a possibility? Two, why is the delay there?
Before I answer that, let me just maybe intervene on what the discussion was between the MNOs and the banks, because at some point in time I was so central to this discussion. So when MNOs were coming into this market, everyone thought they're competing with banks. My position was that they're not. They're actually complementing banks, because banks are there to give other banking services. And remember that all the deposits that they do come into the banks. So the banks should stick to doing banking world, lending and stuff like that, and payments can be taken on by the MNOs to the last mile, because the banks won't reach there. So I think this debate has been raging on for a while, but I think that now things are coming out very clearly that the cake is big, everyone can do their services and do it well and serve the client. So in terms of pricing, I think for me, it can even be lower than that. Even 4% is quite high. I've just told you that at PAPS we charge $2, where they are transferring, it's between $2 and $12. So we're transferring $1 million from one country to the other, it's maximum $12. What percentage is that? Is that 10%? Is that 2%? It's 0 point something percent. So there's a lot of I would say even for the fintechs, there's a lot of work to be done and even money to be made by even you're charging the lowest charges because the volumes are there. The volumes are not seen today because there's no cooperation. There's today what we call not Pan-Africanism. There's a new term called Meta-Africanism. So Pan-Africanism brought us together, united us. We speak the same language, we created the AU and stuff like that. But are we working together? We have not worked together for a long time. So we need to work together for this kind of infrastructure items, elements. Payments is one of them. So the way to solve it, to answer your question directly, is that let's work together to have one system as across Africa to be able to use it, because the volumes are there. Trade between African countries, intra-African trade is around 14%, whereas in Europe it's around 75%. Intra-American is around 50-something%. So if intra-African trade even rose to 35%, that is a huge volume. And we can only achieve it by uniting and cooperating and working, using the one infrastructure, not siloed infrastructures. There's a misconception sometimes that we have so many regional payment systems, East Africa, COMESA, and the rest. And the argument has been that there's more trade within the neighboring countries. But we've discovered differently. We had a workshop in Liberia. And know what the request was? That please open up with MNOs in Rwanda. Then I asked them why. They said we're actually sending a lot of money through MNOs into Rwanda. So that was music to my ears. I said, very good. When I go there, I'll meet Gaga and the team, and then we'll see what to do. So Africa trades with each other, but we just don't know. We don't have the statistics. Yes. And lastly is, I think Patience talked about it, cooperating, competition. This is what we used to call it back in the day. When Simtel was launched in this very room in 2003, the idea is that banks work together on infrastructure, compete on services. So that was the message. And this is a message you still carry today, not at the national level, but now at the continental level. Thank you.
Thank you very much. 2003, yeah. For some of us. Victor, I'm going to bring you back into this conversation, but before I bring Victor back into the conversation, just a reminder to our audience that feel free to put up your hand if you have a question. Starting now, we have about 10 minutes to the end of this conversation. Fiona, there's a question at the back. We'll start with the gentleman at the back, then we come to the gentleman at the front. But before we come to that question, Victor, there are quite a few conversations. You talked about 8 to 4%. Mr. Sebavi says that can even go lower to 2%. To many Africans, the face of MasterCard is it could even do much better than 2%, going by the benefits it has gotten from the continent. My question there being, why has it taken this long for that to happen? And two, when we talk about open finance, embedded finance, digital public infrastructure, as Mr. Sebavi has alluded to, which of these trends is going to have a tangible impact on the people, on us, in the short run?
Okay, thanks a lot. So I will start with the open banking or open finance versus the embedded finance question. And then I think we'll talk about the first question after that. So when I look at open finance versus embedded finance, it's basically one coin. One side being open finance as a subset of open banking. And then the other side of the coin is obviously the embedded finance piece. Why I say so is because you need to create the infrastructure to enable open banking or open finance. So that layer kind of precedes the other second piece, which is the embedded finance. Because remember, you need to create the infrastructure, which is obviously led by actors such as the banks and so on. And then you need the consumer on the other side to benefit from the finance piece, which is the embedded finance. And so you cannot have one without the other. And the best thing is to get both of them to work more efficiently because they complement each other. So ideally, what we want to see is, as we are having these conversations around which one is a better subset of the other, I think we need to have a roadmap that says, move from this point to this point. And I know in Rwanda today, that is a conversation that is at the table. It is a conversation that is saying, let's create the infrastructure, and then let's pass it on to the embedded finance, which is basically lending, loans, etc. And we have the capabilities with the actors that are in the room, in the country, for example, MNOs, they can provide loans. And what we do as MasterCard, we provide an underlying infrastructure as our network to complement the existing processes that are there. Now, what we then bring onto the table is security, because we are paranoid about security. Without security, our business is non-existent. We need to ensure that we give everybody confidence to be able to transact. And then we look at security from three aspects. One is obviously, who are the actors that need to be using our network? We obviously need to then weed out the bad actors and keep the good actors from a sanctions screening, etc., AML controls, and so on. Then we need to look at the network, because remember, we now live in a cyber crazy world where everybody is trying to penetrate and get something out of somebody else, which is your online payments business. We have, I believe, the best tools globally to be able to actually deploy to all our partners to ensure that we are dealing with these actors. And that also goes beyond just our traditional partners today, but also governments. Governments are using our infrastructure to be able to weed out some of these really bad characters, especially in the more developed worlds where, proceeds of illicit actions are actually fueling other, bad things that are happening in society. And then secondly, so the network is another layer that we look at through our, what we call safety net. And then we need to then go into the consumer. The consumer obviously being the person that we need to really solve for, because they want to ensure that as I'm transacting, do I feel safe? And that's, again, coming back to your question around how do we encourage more and more usage? Because today, if I look at our own statistics in terms of usage, yes, we've got the capabilities, but usage is still very low. So there's more to do. And one is obviously education, but two is to ensure that we give confidence to the consumer that whenever they either go online, whether it's a tokenized card or so, or even if it's this ring here, which, by the way, is a token, and you'll be happy to know, patients, that this is a KCB, Kenya ring, which I use for payments. I tap, and people think it's not safe because, it exposes my credentials. But guess what? This is the most secure element in payments today. And I can control it using my mobile phone. So there's a lot of education that we need to impart to the consumers so that it gives them confidence. But we can also, we need to work as an industry collectively to pass on a common message around some of these things that will really drive engagement, activation, usage, and then obviously retention as well.
Thank you, Victor. Now we'll open up to a few questions. One question per person, go straight to the point. We have a question from a gentleman there, another gentleman here, and of course, Mr. Bosco Yachu here as well. Let's start with the gentleman at the back, then we'll come to the front.
Hello, good morning, everyone. My name is Kingston. Interesting conversation, and of course, I love the illustration with the ring for payment. My particular interest in all of the conversations we've had today has been about the new wave of payment as it is. We're seeing more concentrated conversations around stables and blockchain innovations going around. By the way, my name is Kingston. And I've spent the last decades building and, of course, advising blockchain and fintech ventures across Africa. I want to ask this simple question. How are banks preparing for a future where customers may not only choose between banks, fintechs, mobile money providers, but also between traditional payment rails and blockchain-based settlement network? Yeah, thank you.
Thank you. We'll come to the answer to that question in a short while. I think, Patience, that will come to you. Gentleman here at the front, you don't have a microphone yet, so we'll go to Mr. Bosco. Yeah, to here for his question. Then we'll come to the gentleman there.
Thank you very much, Arnold, and the panel. Very good insights and really very, targeted conversations on topical issues that we all face. I must say that, there's always this, we all understand that, competing over infrastructure is not the best strategy. And we've talked about it, we understand it, we seem to really appreciate it. But actions don't follow what we say. And I haven't figured out really, what's the problem? If we are talking about, for instance, insurers or bankers, when you sit together collectively as an industry, what do you discuss about sharing infrastructure, not competing over infrastructure? I wonder really what you discuss, because we all discuss that and we agree that it's not the best strategy. Rather, we should be focusing on seeing how we eliminate the client's pain points, really, and giving the right value propositions that speak to the needs. I just wanted to understand why we are not seeing actions that move towards that direction. And I must say that we have examples in some markets where sharing as industry players have actually benefited the entire industry. South Africa, they did education together for the insurance sector. Everyone provides a portion of their bottom line, and they are doing very well. You can see people understand insurance more than other markets, and you can see the share of the penetration, which is always increasing. My next question is about, probably to my friend John Bosco Sewabi. We have instant payment systems in different countries across Africa. And the main problem that we have is that most of them are not inclusive. They are serving a certain portion or a certain segment of the population. And we are excluding many. And that becomes a problem because we cannot control who will be trading with the other countries. How do we ensure that those instant payment systems are inclusive, so they have majority of the economic agents? And then how do we actually scale together through PAPs? Because we've been talking to different governments across Africa. We now have close to 5 deployments that are going on, backed by a modular platform. And what we see is that really having everyone hooked to that infrastructure is probably an enabler of cross-border transaction, because when you have domestic interoperability, then it's easier to have regional interoperability. So what can we do collectively to work together and ensure that we achieve this goal as soon as possible? Because the cost of inaction and the cost of waiting is too huge on this African society. Thank you.
Thank you very much, Mr. Jean Bosco. So we'll take the last question. I'd love to have a question from a lady as well, if any, please. Yes, sir.
Okay, thank you, Arnold. Good morning, everyone. My name is Samuel. I'm founder of 313 Business Point, an SME advisory company based in Rwanda. I have over 17 years experience in the Nigerian banking industry. I want to thank the MD of BBR for your leverage on the insight on the leverage of merchant activities and mobile money data to understand SME cash flows, because it was something that I was very worried about in the East African region. Mobile money, it's very, very common here, and I was wondering how banks understand SME cash flows. But my question goes beyond this data for credit assessments. How can banks further support SMEs with financial advisory, which is what I do, and capacity building so that these businesses become more structured, scalable, and bankable over time? There's something that we do in Nigeria, we call it SME clinics in the banks, where we call our SME customers, we get consultants, and we speak to them on how to separate their business life from their personal life. So channel money for business, and it's for business. But we can take this conversation further from here. Thank you.
Thank you very much, Samson. So I want us to start with Sergeant Bosco. I want you to take both questions, actually, the questions from Mr. Iyachu, starting with that question, which I found a little bit rhetorical, because Mr. Iyachu, if you don't have that answer to why they have not been working together on that, then we don't know how we could have that answer. So, JB, you talked about 2003 as the year that first conversation was held. It's 2026, 23 years later, still no agreement on using the same infrastructure. Why not?
Well, maybe Arnold was still very young at that time, but I was also a young man starting in the bank. We've made strides in this. It started as a conversation that the central bank, actually, the BNR at that time, did invest a lot of money to build the infrastructure. But with the banking at that time was not understanding the element of not competing. But to be honest, I think today where we are in a good place, Bosco. Because now banks are sitting together and saying, okay, can we invest in this together? Can we do this research together? So I think that let's not beat ourselves so much. We've done well, but we could do better probably. When victors first came to this country, Visa and MasterCard, and they were all telling us many things about interoperability, we listened and learned from them. We said, okay, how do we now interoperate within the country and also include acceptance of the international visitors, their payment instruments, which were cards mostly, into our markets. To date, I think, I've not seen Ara switch here today, but I think that we are in a good position, to be honest. We've done very well on that front. And I'd commend the bankers today that you've done a good job. The foundation was laid so many years ago, but it's being used very well. I'm not trying to earn a dinner from Pesha and Diane, but it's a good job. The job has been done very well. And remember that when we started, currency in circulation was around 25%. To date, if I read properly, it's around below 5%. So that means these systems are being used very well. If you look at the financial inclusion, which was 21%, it's now in the 90s. So I think that we're doing well, but we can do better because we should not judge ourselves to what will happen inside the country, but how do we compete globally as Rwanda? Now, to the other question about inclusion through PABs. Moja Loop and others have done a good job in nationally to have inclusive and interoperable systems within the countries. But the most important bit in payments is not the sending of money only, but the settlement behind. And settlement is layered on what kind of currency you're using. So now we are using fiat money, Rwandan francs, Kenyan shilling, Mozambican meticash, and stuff like that. So if we interoperate between instant payment systems in Rwanda with Mozambique, we need to settle those two currencies. So the settlement is the most important bit in a payment. So there are three options. We convert our currencies. We find a way we convert them. Now it is through a dollar or euro, which we do at PABs using the net settlement. So we net off, and then the net is settled in a convertible currency, as we call it. That is good for now, but not sustainable for meta-Africanism, as I said. So what Afreximbank is doing today, we are looking into an exchange rate mechanism that will be able to make African currencies convertible into each other. That's a project that's going on. Studies have been done. And then the other is, if we go to my colleague up there mentioned about stablecoins and which my colleague is going to touch on. But stablecoins also have their own weaknesses. Number one is that it's dollarizing the economies. We know that stablecoins today are all backed by the US dollar. So to me, my argument about stablecoins is that they're taking us back to digitalizing what happened between 1944 and 1970 when the dollar was backing all currencies in Africa. So now you're digitizing that. But that's an argument I think Gabriel would want really to go into, because he also mentioned it. So these thoughts are around the world, but they also have other economic repercussions. Then now we come to the central bank digital currency. If all central banks can agree that let's introduce a digital currency. A central bank digital currency is something I think it's very simple as that, to say how much of my broad money I can digitalize, or digitize, as we say. And this can be used within the ecosystem. But the problem would be now, how, to date, the central bank issues currency and uses the banks to supply that to the end users, the population. So how is it going to work with the CBDC? So that infrastructure has to be looked into. The other is, can we have a government or a central bank issued stablecoin, which is a CBDC now? So these thoughts are around the world, and my colleague Bosco, this is what we are looking at to see how interconnecting technically is the easiest. But how do we now do the settlement, do the economics and the business behind and the operations? Thank you.
Thank you very much, Mr. Sebabi. Patience, I'd like to come to you for those two questions.
Thank you, Arnold. I know time is really not on our side, so I'll try and keep it short. Kingston asked a very interesting question around how something around choosing between banks and other service providers. And I think as bankers, we realize that the landscape is becoming a lot more competitive. The kind of competition that we had 20 years ago versus the competition we have today, it's just completely different. Customers have access to so many other options. And this is reflected also in the financial inclusion report that is usually published, which shows that while financial inclusion in Rwanda is at 96%, at least from the last report, access to banking services is only 22%. So for us, I think the future is really around collaboration, and I talked about this earlier. I think for the customer, it's really going to be about who gives me the most value. And what comes to mind today is, when I think about WeChat as a platform, for example, it's not a banking service. I think it began as a chat, like a WhatsApp platform or something like that. But through that WeChat platform, you're able to do basically everything. So when I think about financial integration, a financially integrated ecosystem, WeChat comes to mind, because as a WeChat user, you're able to do your savings on one platform. You're able to do all your payments on one platform. You can do e-commerce on the same platform. You can get insurance services. You can do your investments through this one service. So when you think about ease and all your financial services, and really incorporating financial services in the lifestyle of people, for me, that's a platform that comes to mind. So how do we as banks also innovate and collaborate? Because we know that we can't be as dynamic to be able to provide all those things in one stop, but we can do that with the right partnerships that also enable us to get to that last mile connectivity. So I think it's really around that collaboration, I would say. Yachu asked a question around what we discuss. It's a good question. We have discussed for so many years interoperability. Like Gabriel said, when you think about payment infrastructure as a public good, remember at the end of the day, we are all, corporate entities that are looking to return value to our shareholders. And so it's really about, where do I put my money that's going to give me the fastest return? As a public good, the intention is really not around making money. And so I think there's a role of the government to come in and put in place that infrastructure. And this is where I think our switch came, and they've done a fantastic job. We have eCash now, which is going to provide us that interoperability platform. 30th of June, we're going to go live with the interoperable system where you'll have banks, SACCOs, MNOs, and the entire financial ecosystem integrating through one platform. At the end of the day, the customer is the winner. We're all basically providing the same service, and so the challenge for us is to always be on our toes to innovate for the benefit of our customers. So I think we're headed in the right direction. The challenge is going to be, how do we continuously invest in this platform to make sure that as the volume of payments increases, it's also able to grow at the same pace or at a faster pace to anticipate future needs. Samuel also asked a question around what we're doing for the SMEs. Great question. As a bank, we like to say that our competitive advantage is around, the reach that also helps us to serve SMEs across Rwanda in the most compelling manner possible. We do provide SME advisory services. The scale, I believe, can be improved. So through our Biashara Club, we have a Biashara Club membership where we provide business development services for our SMEs, again, to help them to be able to scale their operations by really putting in place governance and the right structures to manage their businesses. And so many other initiatives that I can't get into detail in this conversation, but I believe every bank is trying to do that in their own way. When you look at it as something that, is to give value immediately in terms of return. I think where banks have really struggled is that it's not the kind of thing that you do to get return, but it's to help the SMEs to improve. And because their governance has improved, you're then able to serve them better and make money through lending them. So we do have initiatives to support SMEs, and it's something that I'd love to continue a conversation on.
Thank you very much. Patience. To the audience, just by a show of hands, how many of us deeply knew about the role PAPS is playing in Meta-Africanism right here? By a show of hands. Okay, fair. That's close to 50%. So, yeah, Mr. John Bosco, more conversations with Tony, I think, are needed in the future. Allow me to thank our panel of experts, starting with Mr. Ndlovu Victor. He's the Vice President and Head of Business at MasterCard. A hand clap for Mr. Victor Ndlovu. Mr. Jean-Claude Gaga, he is the Managing Director of Airtel Money. Thank you for making the time. Mr. John Bosco Sebabi, he is the Deputy CEO of PAPS. Thank you for making the time. Last but not least, Ms. Patience Mutesi, she is the MD of BPR. Thank you for being with us this morning. A hand clap to yourselves, the audience, for being such a listening audience this morning. And as I throw back to Fiona, in the words of the great poet, B.I.G., if you didn't know, now you know. Thank you.